Dear students, we welcome you to our classes conducted by our YouTube channel SL Account School. Today's topic is limited liability companies. In this lesson, we are not planning to teach a detailed study of the subject, but to make the students familiarized with the terminologies we may come across. The word limited liability means it's a form of legal protection for shareholders and owners that prevents individuals from being held personally responsible for their company's debts or financial losses, unlike in the case of sole proprietorship or partnership. Perpetual succession. A company has a permanent life. Due to separate legal existence, the life of a company is not affected by a death, insolvency, lunacy, or disability of any shareholders. Hence, it is said, members may come, members may go, but the company goes on forever. A limited liability company is a legal entity or a legal person, can own or dispose properties. It can be or sue on its own rights. Yes, shares are units of capital or equity. It may be in large numbers with small unit value as much as $1 or $2. There are different kinds of shares, each varying voting rights, sharing of profit in the case of liquidation, different level of settlements. Ordinary shares are entitled to unlimited profits and they are the owners of all the reserves. They may be with full voting rights or non-voting rights. Next, preference shares, they are entitled only to a percentage of profit which is specified. This can be cumulative or non-cumulative. In the case of cumulative, in any year, if they are not paid dividends, that dividend arrears can be added to the following years. In the case of shares, once it is issued, it cannot be repaid or returned except in the case of redeemable shares issued with a prior agreement to redeem it on a specific date under certain statutory conditions. Term authorized shares refers to the maximum number of shares a company is legally permitted to issue. This is specified in the memorandum or articles of association. It is not necessary to issue the entirety of authorized share capital at once. It can be issued at different levels as per the requirements. Whatever is issued is called issued shares. The word nominal share capital means the capital that is paid by the shareholders to buy shares at their face value or par value. That is to say, there is a fixed unit value per share. These shares can be traded outside the company at the market value, which can be higher or lower. It can be transferred between members of public freely. Share premium is the profit made by the company themselves by selling the shares at higher value than the par value. Capital will be shown separately. The profit, the share premium will be shown separately. These are capital reserve and this cannot be distributed as dividends. Rights issue. These are issues made to the existing shareholder on a priority basis and use this to purchase themselves, or they can renounce it in favor of another buyer. This is optional, not compulsory. The term called up capital is out of the total nominal value of the share. It need not be called everything at once. Depending on the requirement of the company, it can be called part by part. That part is known as called up capital. Whatever is paid is called paid up capital. If everything is paid per share, then it is called fully paid capital. Or shares. The next, bonus shares are shares issued to the existing shareholders free of charge from the reserves of the company. Even capital reserves can be used for this purpose. Another instrument you will come across in limited liability company is debentures. These are basically loan specifying rates of interest, time of repayment, security offered, etc. These two can be subdivided into small units. However, these are not capital or equity at all. Dear students, unlike in the case of sole proprietorship or partnership, all profits and surpluses made are not credited to the owner's account. That may be kept as a reserve in the case of limited liability companies for future contingencies or to pay as dividends. Revenue reserves are such which are earned as profits on a normal course of business. Revenue reserves are profit and loss account balance or retained earnings. General reserve, which is purpose is not specified, or it can be dividend equalization reserve where the purpose is specified. Unlike revenue reserves, capital reserves are built up by capital profit, the unusual profit of the companies, which are not meant to be distributed as dividends. Examples are share premium accounts, profit made from sale of non-current assets, or revaluation of fixed assets, etc. By these reserves can be used in order to write off capital losses, such as loss made out of selling non-current assets. Okay, now let's look at some questions. Which statement is correct? A. All reserves are created by transfer from retained earnings. Not all reserves. For an example, share premium. All reserves are shown under equity. Therefore, the statement B and C are incorrect. And therefore, D is the answer. The next question is, a company made a right issue of shares. Where is this recorded? The right issue is not an income. Therefore, A and B are out of the possibilities. We are required to show the movements of equity in the statement of financial position. Therefore, the answer is C. Now, let's look at the next MCQ. A company's statement of financial position shows the following. Share capital of ordinary shares of 10 each is 100,000. General reserve 60,000. Retained earning 210,000. The following transactions have taken place. 1. The company pays a dividend of 70,000. Look at the answer. The retained earning will come down by 70,000 and leaving a balance of 140,000. 2. The company makes a bonus issue of 5,000 ordinary shares of 10 each, so that will be 50,000. You will see general reserve reduced by 50,000 and ordinary share capital is increased by 50,000. 3. The company issues a debenture of 120,000 which is not part of equity. therefore not taken into account. So the capital and reserves is 300,000. Answer is B. The next MCQ, which items will be shown in the statement of changes in equity? Dividend proposed will be in income statement and current liability. Interest paid to debentures will be income statement. Issue of share capital will be part of changes in equity. Transfer to reserves also part of changes in equity. Therefore, answer is 3 and 4, D. Okay, the next MCQ. A company made a bonus issue of ordinary shares. How was this recorded in the books of accounts? 4 journal entries are given. Issue of shares will be credit to share capital account. Therefore, C and D are eliminated. Since the bonus issue is not for cash, A is eliminated. The answer is B. Now let's move on to the next MCQ. A trial balance on 31st December 2020 showed the following information. Ordinary share capital 1 each is 500,000. Retained earning 300,000. On 1st January, the directors created a general reserve of 70,000. General reserve is made out of retained earning. So the general reserve will increase 70. Retained earning will decrease by 70, giving a zero effect. The next information is at the same time 200,000 ordinary shares were issued for 300,000. That means there is a share premium reserve of 100,000. So therefore the answer is A. MCQ is asking about the total value of equity. 8% debentures are not part of equity. Therefore that is eliminated. The total is 2,030,000. The answer is B. Now let's move on to the final question, where balance sheets of two companies are given. They further state on 1st August 2003, Combo C Limited was formed with an authorized capital of 750,000 ordinary shares to take over the assets and liabilities of those two companies at their book value, except the following. We are required to calculate purchase consideration of both companies. 1. The premises of R Limited and S Limited were valued at 300 and 180 respectively, which are shown here. 2. The net realizable value of stock of R Limited is given. S Limited, there is no change. 3. Debtors in the sales ledger of S Limited, a debtor valued 480 was written off. Please look at their working too. Adjustment 4. Vehicles were adjusted to their part exchange value of 33,750. See the change in S Limited. Adjustment 5. Machinery was reduced in value by 12%. Please see working 1. Adjustment 6. Goodwill was valued at 10% of the total of the last 3 years profit and loss, which are given here. Please see working 3. Therefore, the purchase consideration for R Limited is 450, S Limited is 225. Shares of 1 each were paid to them at 150 each. Question B requires to show the capital and reserves of C Limited, which are share capital of 450 at 1 each and share premium of 225,000. Hope the answer is clear. Dear students, we recommend more and more exercise like this to get better familiarization of the subject. As you all know, these classes are conducted to you by our YouTube channel, SL Account School. We kindly request you to share, like, subscribe. Thank you very much.